Welcome back. Shares of CarGurus are surging on a bottom line beat today and stronger than expected guidance, which is interesting. The shares are on pace for their best day since August, still down about 14% year to date. According to AlphaSense, 89% of S&P companies that have reported so far this earnings season have mentioned tariffs. And CarGurus is no different. They estimate tariffs could add $2,500 to the average new car price, which is currently around $50,000. Joining us in an exclusive interview is CarGurus CEO Jason Trevisan. Jason, it's great to have you here. Welcome.
Thank you very much. Thanks for having me.
Let's start with how you can say, on the one hand, the price of a car is going up by $2,500, and on the other hand, we're raising guidance for the year.
Yeah, so there's certainly uncertainty in the market, and consumers are concerned about the price of cars. So you saw a lot of consumer demand get pulled forward in March and April. That has since abated a bit with some consumer sentiment indices going quite a bit lower. But we're a marketplace, and so we help consumers find cars across dealers. And so as they seek affordability, they're looking to look across hundreds or even thousands of dealers, which we help them do.
Understood. So could I go so far as to say, much like in the old grocery store model, that higher ticket price just helps everybody make a little bit more margin?
On cars themselves?
Yeah, exactly. Or sort of all throughout the sort of transaction food chain.
Yeah, so I think the big question is how automakers are going to handle the tariffs. And so some have come out with positions on that. Others have not yet. We're a marketplace, and so we work with dealers principally and consumers. And whether prices go up or down, we're helping connect shoppers with dealers. And so if the margin improves or worsens on cars, what we're really trying to do is provide consumers transparency and provide dealers analytics and predictive intelligence on the market. And in uncertain times, that's actually even more valuable.
Delving into the business model as much as you'll kind of allow me to do so. So do you guys make a percentage of, a transaction, or is it a fixed rate? How does it work?
Sure, we do not make a percentage. So our primary revenue model is dealers subscribe to our platform. And so we get a subscription rate from dealers that's based on the size of the dealership, where they are in the country, and the different products of ours that they buy.
Got it. Okay, so then my follow-on question to that would be, because if the level of car buying goes down, there has to be some elasticity, right? If prices go up by $2,500 and people have pulled forward demand, if demand goes down later this year, theoretically that could affect your business. But I guess what you're saying is, as long as there's value on the dealer side for having access to your platform, they're probably unlikely to pull back much.
I mean, that's historically been what's happened, is that we've been a go-to partner for dealers. We're the largest marketplace that there is. We have the most consumers, the most time spent, we have the most dealers, the most inventory. And so whether prices rise or fall, or whether consumer demand rises or falls, dealers need to market their cars, and consumers are looking to search for that affordability across an ever-expanding number of dealers. And so, yes, to your point, regardless of price elasticity, we are a highly liquid marketplace for both sides.
And then just to kind of bring it back to the original guidance, so what then, on what basis do you raise guidance for the year? How do you foresee this all playing out?
Sure. So we expect prices to rise, as you showed on that visual earlier. And despite that, especially in times of uncertainty, we think that dealers who want to get in front of consumers, who want a strong ROI, who want high quality leads, and importantly, who want predictive intelligence into what the market's going to do, which is what we're providing them more and more of. As the number one provider, they are really sort of flocking to quality and size that we provide. So that's why we're seeing such strong demand from dealers, and we need to fuel that with strong demand from consumers, which we're doing with a new brand campaign and a number of other marketing growth opportunities.
I see. So I don't want to put it so crudely as to say it's almost marketing for dealers, but I can see why they'd need to invest in platforms like yours at a time when they need to get people in to buy cars.
Exactly. Exactly. And whether consumer demand is high or low, they need to market. And they also want to understand how their competitors are performing, how consumer demand trends are performing, what makes models trims are more appealing than others, how they should think about pricing and merchandising. And so we're a platform that helps them understand the market better and helps them sell more cars more efficiently.